Good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Tuesday, the fourth day of November. Uh, Lower overnight. December corn down 4.25 cents at 4.30 on a 4 cent range. November beans got hammered down 16 cents. We had a 17-cent range from 11.19 to 11.03. We settled on our lows. Jam beans, same thing, down 17.25 cents. The Nov Jan spread had been tightening. Um, we had a high in jam beans last night, 11.35, and the low of 11.16 and a half. We settled at 17 here this morning, down 17.25 cents. D-Sweet did manage to be up 3 cents in both, in Chicago. KC up a quarter cent. This could be some spread in there, but it looks like we're going to be under pressure here today after making 16-month highs in soybeans. If you follow my letter, you know I was aggressively using this 16-month rally to suggest to clients to get cleaned up on sales. And also, some of us took a look at 2026 out there. We're right at $11. Maybe something you want to take a look at there for next year already. I know people, some guys are still marketing corn and beans from the 1984. I get it. Some of you guys hold on to stuff for everything. But my plan, try and get cleaned up, on sales where we can, defend what we can. I'm starting to take a look at 2026, long story short. I think the big story is that, we could have a pretty good correction here off of the news. Basically, we don't have confirmation yet that the Chinese are going to buy beans from us. You had a huge collapse in soybean basis coming out of Brazil. If you look at the figures, and I'm pretty sure these are correct, Brazilian beans are $1.12 cheaper. March, April is $1.24 cheaper. So all those beans heading out into the future are way, way less expensive than the United States. So you can have all the agreements you want that yes, we'll buy American soybeans, but if beans coming out of South America are substantially cheaper, a dollar, 50 cents, 75 cents, a dollar, it's going to make it hard for producers to get those sales done out here in the United States. So there's no confirmation, no specific pledges. They're still charging 13% on our bean in points versus 3% coming out of South America. China's got a ton of South American beans sitting in their port. So where the rubber meets the road, and I think that, whatever happened with the prices, whatever the reasons are, it was a great opportunity to hedge or sail. I don't care what you say about it. And hopefully you took advantage of it. I mean, even now today with jam beans are at 11.17. That's better than a sharp stick in the eye. Did you miss the top? Possibly. What you don't want to do is leave a huge chunk of the rally on hand. What am I talking about? Well, jam beans in a month went from 10.12 to yesterday's high was 11.35 and a half. So $1.12. You don't want to leave 60, 70 cents on that. There's a gap down in the charts in jam beans down at around 10.60, 10.63, 10.58. We're trading at 11.17. I have seen stranger things than that. Okay, so this is a good opportunity. People always are afraid to sell into big moves like that because they think it's going to continue to go higher. I always think that from a producer standpoint, you get paid with good cash sales. And the last 2 days, even overnight, the last 2 days, that was the best prices we've had for jam beans since July of 2024. So would it have nice to have been more? Yeah. But boy, for producers, I still think you need to get after this and get hedged or sold on this rally. That's all I can say about that. Everybody out there, you're all adults. You can do whatever the heck you want to do. But a big part of marketing is not selling stuff in the low. We're all familiar with the statistics out there. They're not my numbers, everybody's numbers. 2/3 of all the grain in this country eventually gets marketed in the bottom third of available prices. You know, a person just if you took 10 months out of the year and you didn't do anything during harvest and you didn't do anything during planting, if you just sold 10% of your crop every month, you'd at least get the average. But historically, people do what people do. They get emotional. They want to buy it when we're on 16-month highs. They want to sell it when we're at 1 year lows, and they end up doing a poor job of marketing because they get emotional. Um, Having an advisor, have someone you can trust, have someone that's got some miles under their belt, can help you pull the trigger. And hey, guess what? If you don't like my cash sales, I won't be in business much longer. So make the recommendations, take it all with a grain of salt. Everybody has an opinion. In my opinion, it was a reward to rally. Take it or leave it. We're going to see what's going to happen today with fat cattle and feeder cattle as well. Those were higher yesterday. I did a big breakdown in the letter yesterday, which I sent out at the end of the day. Are we going to go fill those gaps? The gaps are all outlined in the letter. I do all the technical homework for you. So if you're concerned about stuff like that, you can look at it and use it as a guidepost. We're going to watch to see today with these hogs. These hogs are dancing at a 4-month low. Are we going to finally find some support here and turn around? I don't know. Lots of moving parts out there right now. And again, I think probably the most irritating thing about this is we don't have confirmation that China's going to come buy our beans, and you've got beans coming out of South America that are substantially cheaper than the beans we have to offer here up in North America. And if there's no weather issue, we're looking out ahead. We could be in the same situation. We're trying to get to pick from South America. South America has another huge crop. They're already suggesting that there were 3 to 4 more million metric tons of soybeans grown in South America this year than the USDA had thought. So that crop got bigger, and it's something that when you've got negative fundamentals like that, right? Negative stuff like that, where basis is this and this is that, and you've got prices on the board that are 16-month highs, the highest we've had since July of last 2024. That's out of whack. That may not last. Set a hedge. This is Chris Robinson. If you need help, give me a call, 312-638-8868. I am available. I would suggest take a look at my letter. If you don't like it, you can turn it off and you don't ever have to look at it again, but take a look at it. I do the homework every day. It goes out 6 days a week. I do a Monday through Friday letter. I do a weekend wrap where I take about 4 hours and do a big picture look. Also, once a week, I do a private client seminar where you click on the link. It's basically like sitting in the classroom with me. I go over specific charts. I take time. I talk about what it is I'm looking at, why I'm looking at, trying to educate people about stuff that I've learned. I did not reinvent the wheel. I use very, very simple stuff. And my program is geared to producers. Producers are already bet long. You are a net long speculator. You're long all the corn, wheat, and beans that you have in your bin. And you're long all the corn, wheat, and beans you're going to grow for the next 30 years. So that's your position you need to defend. This is Chris. Have a good day.